Thanks for being here.
Yeah, that's awesome. Thank
Round 2, or is this round 3?
At least round 3 for me.
Oh, wow.
Yeah.
Okay.
Yeah.
The master golfer, what's your handicap right now?
Just over 0. Yeah. So I've got a goal here. I'm going to be 50 later this year, and one of the goals is to be under that 0 point, under scratch by the time I get to my birthday.
I had an agent talking to me last week.
Yeah.
And said his goal is to shoot the number of homes that he is going to sell this year.
Okay.
So there's going to be this converse relationship. I mean, I should say there's this adverse relationship where if he sells too many homes, then his game is actually going to, because he averages about 70 homes.
Okay. Perfect.
So if he sells too many homes, then his game is actually going to
get worse.
So
of course. There's some give and take there.
What
for
would
sure.
you? Okay.
Yeah.
JJ, would you rather sell more homes or shoot a better score?
Man, I don't think I would want to have to choose. But yeah, in this market, definitely, if you're a realtor, you'd probably want to sell more homes and shoot a little higher score because you always got next year.
Yeah, and isn't it a reflection, if you're shooting that low, a reflection of one's commitment to the industry?
I've heard that a lot. Yeah, like, oh, you must be not working enough. Your golf game is too good.
Let's talk about the market.
Okay.
Is there anything surprising that you want to tell us? Some myth that you want to dispel for us as either the buyer or the seller?
Sure. I hear it all the time that it's not a very good time to buy a house, and maybe it's just that I drink the Kool-Aid, but definitely right now I feel like there's a window of time that a buyer has where they still have the ability to pick their own home, not have a lot of competition, and as interest rates have started to come down, we've seen competition start to pick up a little bit. But when rates really do come down, and that's probably late 24 into 25, but I think even in the next few months, if we see a downward trend for rates even more, you're gonna have more competition. We still have very low inventory in basically all of Idaho, but definitely in the Treasure Valley, and you're going to have competition, and that's just going to take those prices back up. So right now, even though rates are still on the higher end, you have the opportunity to get into a house, maybe pay a little less, get some incentives from the seller or builder, and those are going to go away. So I think it's a great time to buy.
That confuses me, though, because the majority of us who are getting into a home are getting into another home.
Yeah.
So we're playing this role. Yeah, I get that. Okay, buyer, great. But I'm a seller too.
Yeah, you're a seller.
So help me navigate my brain thought. Help me navigate this thought process of I've got to also sell a home and purchase a home. What's the benefit of that to me to sell and buy?
Yeah. Well, it's the golden handcuffs, right? That 2.875 interest rate that you have on your current mortgage. You may or may not still love your house, or it may not really fit your family, right? So there's going to be a breaking point there where a lot of folks then will list their house. But I think, from a, just number of transactions standpoint, I think that we saw a stat the other day. It was like 29% of homes purchased last year were first-time home buyers. That is really our target. That's really who I'm talking about. Like, don't sit on the sidelines. If you have the ability to go out and get a house right now, but if you do have a house to sell, we're talking to a lot of folks about keeping that home and renting that house and using that income to offset what that higher mortgage payment is going to be on the other end. Of course, you're going to need some down payment. So if you don't have that, we could potentially tap into equity in your current house to get that down payment. Or you just put a very low down payment on the new one, and you offset that with rents coming from the old house.
So the world doesn't revolve around Treasure Valley, right?
Yeah,
we have,
of course.
There's markets all throughout Idaho. Some are a little bit softer, some are a little bit more hard. I'm thinking about the first-time home buyer, or maybe it's in a region that's not as expensive, who bought, say, a $380,000 house.
Right.
Okay. And they've seen appreciation on that home over the last 3 or 4 years.
Yeah.
I see them in a very different camp as somebody who's paid $800,000, $900,000, who doesn't really have any need to leave. But this $400,000 person, if they don't have a reason to leave, but we've seen so much increase in the value of their home, is there any strategy for them to say, you know what, I would like just to get into another home to realize that equity. Is that a smart time for them to do that or not?
I think so. I mean, again, the interest rate that they have on that current house is the real kicker, because they're real comfortable in that, call it $1,800 a month or $1,500 a month. And so they have to be comfortable in that new payment, which is something we always talk about first and foremost. We're not going to just qualify you for something and say, go buy that, right? If it doesn't feel good, you don't sleep well at night because your mortgage payment's too high, then you got to listen, to yourself and stay where you're at. But I mean, the trajectory of house prices over the course of time, it's always going up. There's dips, and we've seen a few of them. Yeah. Right now, those that are saying, we're going to have this drop in the market, I just don't see it based on statistics, right? There's low inventory. There's still a lot of demand for all of Idaho. And so, getting that next upgrade in home, and then when rates drop, then we'll look to try and refinance that and get you back down into a lower payment.
In my mind, inventory really is the key indicator of that.
Totally.
If we had a lot of stuff available, that would be another thing.
Yeah.
Let's talk about Bluebird.
Okay.
Where are we at today with Bluebird?
Yeah, so we launched Bluebird Home Loans on August 1st of 24. So we're a handful of months in, the toughest mortgage market that we've probably ever seen. Right. So definitely contrarian in starting a mortgage company when others are getting out of the business. But we're very confident in the relationship we have with Silvercreek and the opportunity for adding. We really need to add additional loan officers to our team in order to be able to properly call on and service our partner. And there's such an opportunity for loan officers that they don't have today. So I'm very bullish in in where we're going to be, call it 1 year or 2 years from now. But we have to get through this time of toughness, this winter, if you will. And adding the right people to our team is really going to be a key. And it's going to be able to really take their careers from where they are today, and I would say 2x or 3x what they're doing in their current environment.
Our listenership is typically the Silvercreek agent. They're the ones that are watching this. What message do you have for them with respect to potential lenders to come on in Bluebird? What can you share with them that might prompt them to go talk to a lender that they've worked with? Yep. Or maybe it's an up-and-coming person who wants to be in the industry and they don't, they're making a decision of what profession do I need to be in?
Sure. Great question. I mean, that community of agents is really our sales force out there. There are folks that can really help us to find the right people. If you are, a Silvercreek agent and you love who you're working with now, awesome. Let's try to get them on our team so we can, have them have more opportunities with not only that agent, but our entire network of agents throughout the state, and just looking for great people first and foremost. I mean, they have to fit in culturally to who we are and the way we do things, but the opportunity is there. And so I'd say, don't be shy in introducing us to someone because you think that they're comfortable and they like where they're at because they've been there for a long time, or somebody brand new that they just started 6 months ago. That's okay, because right now in this market there's definitely pain points for every loan officer out there, that if we can help them to better their career and then have it be a win-win for both, I think it's a great opportunity.
One thing that's really impressive to me is the amount of experience that is within that group of Bluebird. Decades and decades. I mean, of course, if you combined all of that, and I think that's kind of silly, but the average seems to be in the 20 plus years of experience on the lending side. So we have agents, a lot of agents that have children in their early 20s. Yeah. And they're having to make this decision about career choices. It seems to me that, yes, Bluebird has a lot of experience, but is there opportunity for somebody who's really committed and dedicated, who doesn't have experience, to be put under the wing of one of you and really learn how to do it? I'm just trying to see what options are out there for people.
No, I think for the right fit, the right person that really wants to come in and learn, from the ground up, it's a really interesting business. I mean, there's very few, kids that, say, hey, I want to be a mortgage person when I grow up.
I did not have that dream at night.
Yeah, exactly. But it's a very rewarding career. So yeah, for the right person, we would love that opportunity to talk to somebody that's young and eager and hungry to do something that can really make a difference in people's lives.
Okay, I have a home.
Yep.
My wife calls me and says, oh my gosh, I found this perfect home.
Yeah.
I'm like, honey, we're already in a house. What are my options?
Right.
I think it's called the bridge loan.
It is, yeah. Maybe not the sexiest term, I guess, but it really does paint a good picture, right? You're in this house. How do we bridge to get into a new house without, we're not pre-approved yet. We don't have the ability to sell our current house really fast. And these guys want an offer that's not contingent on that sale. And so if we have enough equity, let's say that you have somebody that's, bought a house 10 years ago, right? And they only have a couple $100,000 left on their mortgage, but it's worth $800,000 now, right? Well, they've got a ton of equity there. We can utilize that equity to actually get them into the new house without having to put any additional money down, depending on, how big a house they're trying to buy. But it's a great option for the right fit. It alleviates that fear that I'm going to be homeless, that I'm going to sell my house and then I'm not going to be able to find the right one. It gives you the ability maybe to be more aggressive on the purchase of the new house,
right?
Because you don't have that contingency. So maybe you get, a break on the price or some help, concessions from the seller on that property.
Yeah, as soon as we have a contingent offer, that pretty much kills the whole strategy of buying down interest rate, doesn't it? Which seems to be the prevailing way right now.
It does, yeah. Most sellers and even some builders locally, they'll give you a concession to help you buy your interest rate down. But as soon as you introduce a contingency, they're like, well, that concession's off the table. You need to get your house sold and then come and talk to us. So the bridge loan's a great option for that, for sure.
And of course, those are all variable to how much you own in the house, what your income is, all of the above, I presume.
Yep.
This drives me crazy about you lenders.
Yeah.
Why can't you just give me a straight answer?
We can. It just takes a little bit more time, right? So it's really about running the math. We'll go to 75% total loan to value percentage between the two houses. So there's your straight answer.
Yeah.
But it takes a conversation and us running some numbers to help you figure that out.
Okay.